Top banking and financial services trends. Banks are using modern technology all over the globe as a prologue to a future that is mainly driven by technology. A future marked by rapid payments, anytime, anywhere services, customized products, and virtual currencies that invisible banks may manage. 1. Until recently, much of the industry's focus was on increasing return on equity, ROE, as many financial institutions dealt with economic uncertainty, a restrictive regulatory environment, fierce competition, technology-driven disruption, and overhauling legacy mechanisms to meet changing customer requirements. However, as many financial institutions redeploy savings from efficiency measures and strategic cost programs into investments, notably in technology, more banks are putting a fresh priority on innovation. 2. In addition, the industry is focusing on long-term growth strategies bolstered by strong revenue growth, enhanced performance, and higher ROEs. To achieve a wide variety of benefits, BFS organizations are examining alternate operating models and assessing innovative technology. Looking at some of the important trends reshaping the BFS sector might help you comprehend the changes financial institutions are making to be relevant in the future. The continuous digital revolution, the growth of fintech businesses, the growing importance of artificial intelligence, AI, and robots, and rethinking the notion of money are among these themes. Trend 1. Increasing focus on digitization. The sector is seeing a continuous and strong push on digitization and the use of new and emerging technologies to improve operational efficiencies, accelerate time to market, and provide better customer experiences. As mobile and internet banking grow more popular among clients, banks reduce their spending on branches to invest in self-service digital channels. Banks are increasingly able to offer customized services to clients thanks to digital wearable devices that have the capacity of smartphones. Trend 2. Fintech startups. Many banks are attempting to take advantage of the potential given by digital, either by developing their technology or working with fintech firms. Initially, these firms were viewed as rivals, exploiting the hole left by the BFS industry's inability to keep up with technology advancements. Bank fintech alliances, on the other hand, are becoming more common, with the latter offering marketing, administration, loan servicing, and other services to allow banks to provide tech-enabled banking products. Other benefits of bank fintech relationships are being discovered by banks, such as access to assets and customers. 4. As a result, these collaborations are reshaping the financial services sector. Trend 3. Developing a cognitive business. While client demands and competition constraints lead banks to embrace full-fledged digitization, performance challenges force lenders to cut costs and maintain strong operating margins. As new regulatory requirements and data protection rules place further demand on already overburdened resources, emerging technologies like artificial intelligence and robots are assisting banks in efficiently addressing these restrictions. In reality, many forward-thinking BFS firms are already experimenting with various AI applications in their operations. Banks are experiencing the twin advantages of cost optimization while enhancing operations, from deploying AI to power chatbots and delivering round-the-clock, agile customer support to leveraging the technology for crucial duties like anti-fraud and regulatory compliance. Furthermore, robotic process automation and machine learning are assisting banks in replacing labor-intensive, manual processes with highly reliable, cost-effective, and rapid robotic operations. These technologies are also spurring industry innovation, such as biometric-based authentications, voice commerce, and the robot advisors now, Pepper and Lakshmi presented earlier. Of course, the impact on the industry's personnel is another factor to consider. While banks will require an increasing number of individuals with techno-functional abilities, many of their current positions may become redundant. Trend 4. Rethinking money. Blockchain-based technologies are already ushering in a quiet revolution, calling into question the BFS industry's traditional economic worth. With smart contracts, peer-to-peer lending, and digital payments, blockchain is appending established business models by removing intermediaries and speeding up core operations. Blockchain is estimated to save the BFS sector up to USD 20 billion in yearly operating expenses, encouraging a growing number of banks to implement the technology in commercial production. Cryptocurrencies such as Bitcoin, Ethereum, and Ripple, in addition to blockchain, are steadily gaining support, calling into question the need for actual cash. The industry looks to be on the verge of a rebirth in this scenario, where formerly considered fundamental assets are no longer so, and restrictions that once served to safeguard are now themselves giving rise to new rules, such as Open API and PSD2. The future of the industry requires change. While it is clear that more technological use is the way for banks, some questions still exist concerning implementation. Financial institutions and banks should redefine themselves as nimble technology firms in the financial services market to be most effective. This indicates that BFS firms should divest themselves of non-core operations, leaving only those that offer genuine distinction to clients. As consumer tastes, demographics, and lifestyles change, banks must revisit the foundations that drive their basic operations. Banks' capacity to modify themselves quickly and agilely and their future tactics to survive the next revolution will determine who wins and who loses in this technologically sophisticated future.